Okay, so you're ready to jump into real estate investing,
Uh-huh.
but you're trying to figure out like which path is the right one.
Yeah. Right.
It's a lot like choosing a trail at the bottom of a mountain.
Yeah.
You've got so many options.
I see what you mean.
Each one's going to lead to, different views and challenges.
Absolutely.
And we're here to help you navigate those trails today.
Perfect.
So, you've shared some notes with us.
Okay.
REO1 single-family residential, SFR, and other investments, .txt.
Yeah, that's a great place to start.
Yeah, it's a really great starting point.
Mm-hmm.
So let's dive in.
Okay.
We're going to break down all those different real estate investment options you're considering. We're going to weigh the pros and cons of each.
Sounds good.
And hopefully at the end of this, you'll be feeling more confident about taking that first step.
Okay.
Now, to make this even clearer,
Okay.
let's imagine two different investors.
All right.
Okay? So we've got Investor A.
Mm-hmm.
Investor A is someone who's relatively new to real estate. They have a steady income, but their savings are limited. And they're looking for, a lower risk way to build wealth over time.
Okay. Makes sense.
And then we have Investor B.
Yeah.
Investor B is more experienced.
Oh.
We've got a higher risk tolerance. And they're ready to invest a significant amount of capital for potentially higher returns.
Gotcha.
So by keeping these two investors in mind,
Yeah.
it'll be easier to see how different investment strategies might play out,
I like that.
for different people.
Yeah, that's a great approach.
Okay, so let's start with something that most people are at least familiar with.
Okay.
Single-family residential property,
Yeah.
or SFRs,
Yeah.
as the cool kids call them.
Right?
So think of your classic standalone house,
Hmm.
maybe a townhouse or even a condo.
Yeah, those are often the gateway to real estate investing,
Yeah.
and for good reason.
I bet.
They're generally in high demand.
Yeah,
Especially in those,
I was going to say.
those sought-after suburban areas with good schools and that white picket fence charm.
Totally.
They tend to be easier to sell, too.
Right.
You're appealing to a wider market,
For sure.
both investors and families who are just looking for a place to call home.
So I bet our Investor A
Yeah.
would find that appealing.
Mm-hmm.
That sense of familiarity
Yeah.
and the relative stability.
Uh-huh.
But I'm guessing there's more to consider,
Oh,
right?
yeah.
What about the potential downsides of investing in SFRs?
Well, one thing to keep in mind is that SFRs typically offer limited cash flow.
Oh.
You're relying on a single tenant.
Right.
So your income is capped by that one rent check.
I see.
And if that tenant decides to move out,
Oh, no.
you're suddenly shouldering all of the expenses
Whoa.
with no rental income coming in.
So this is like putting all your eggs in our basket,
Exactly.
as the saying goes.
Yep.
Vacancy risk is definitely something to factor in.
It is.
So is there like a smart way for an investor to really assess that risk
Yeah.
to make sure that they're making a sound decision?
Well, that's where a good rental calculator comes in handy.
Okay.
You can input your projected expenses,
Mhm.
things like mortgage payments,
Okay.
property taxes, insurance, and maintenance,
Right.
and compare those to the potential rental income.
Right.
And it helps you determine if the cash flow will be sufficient
Gotcha.
to meet your investment goals.
That makes a lot of sense.
Yeah.
Don't just jump in blindly.
Yeah.
Crunch the numbers
Yeah.
and make sure that the investment is aligned with your financial expectations.
Right.
Now, let's say Investor A
Okay.
is looking for a more hands-off approach
Okay.
to real estate investing.
Mm-hmm.
What are their options?
Well, they could explore leveraging property management companies.
Okay.
These companies handle everything
Wow.
from tenant screening and rent collection
Okay.
to maintenance requests
Mhm.
and even evictions if necessary.
Wow. So really the whole 9 yards.
It does come with a cost, of course,
Right.
but it can free up an investor's time, for sure, and reduce their stress levels,
I bet.
especially if they're not interested in being a hands-on landlord.
That's a good point.
Yeah.
It's all about weighing the costs and benefits
Mm-hmm.
and deciding what level of involvement feels right for you.
Exactly.
Now, what if someone,
Okay.
maybe our Investor B,
Yeah.
is looking for a different kind of real estate investment?
Right.
One with the potential for higher cash flow.
Okay.
What would you recommend?
In that case, we'd start talking about multifamily residential properties.
Okay.
Think duplexes,
Mm-hmm.
triplexes, or even larger apartment buildings.
Gotcha.
The idea here is that you have multiple units under one roof,
Right.
which translates into multiple streams of rental income.
Okay, so more tenants, more rent checks.
Exactly.
It's all about those economies of scale.
Yes.
You're spreading the risk
Uh-huh.
and maximizing your income potential.
Precisely.
This sounds like it might appeal to investor B,
Right.
who's looking for more robust returns.
Makes sense.
But I'm sure managing an apartment building is a whole different beast
It is.
compared to a single-family home.
It is a lot more complex.
Yeah.
You're dealing with more tenants,
Yeah.
which naturally leads to more potential for issues,
Oh, for sure.
more maintenance requests, and more administrative tasks.
Right. So for someone like investor B,
Yeah.
who's perhaps time-constrained but has more capital to deploy, hiring a professional property manager might be a wise investment.
It could be.
It's like building a team of experts to support your investment.
Exactly.
Now, I'm curious about how lenders view multifamily properties.
Okay.
Compared to SFRs, is there a difference in terms of financing?
That's a great question.
Yeah.
Lenders often perceive multifamily properties as more stable investments
Okay.
compared to single-family homes.
Interesting.
This is because the risk is spread across multiple tenants.
Right.
If one tenant moves out, the impact on your overall income is less significant
For sure.
than it would be with an SFR. This perception of stability often translates into more favorable financing terms
Interesting.
for multifamily properties.
So while the management aspect might be more complex,
Yeah,
there's a potential upside in terms of financing.
there is.
It's all about weighing those factors against your individual goals and resources.
Right.
Now let's shift gears
Okay.
and talk about something that I think always sparks intrigue:
Right.
commercial real estate.
Okay.
I immediately picture like those towering office buildings downtown
Yeah.
or those sprawling warehouses on the outskirts of town.
Uh-huh.
Is that the general idea?
You hit the nail on the head. It certainly is a whole different ball game compared to residential real estate.
Yeah, I can imagine.
And the motivations for investing in commercial real estate
Yeah.
can be quite different too.
What are some of the key factors that attract investors to this sector?
Well, one of the biggest draws is the potential for longer lease terms,
Okay.
often spanning 5 to 10 years
Wow.
or even longer. This provides investors with a predictable and stable income stream,
Right.
which can be very appealing,
Yeah.
especially for someone like investor B,
Right.
who's looking for consistent returns on their investment.
That makes sense.
Yeah.
You know, a long-term lease locks in a steady stream of income,
Yeah,
which can make financial planning a lot easier.
exactly.
It's like having a reliable tenant who's committed to staying put for the long haul.
Exactly. And there's another aspect of commercial leases
Okay.
can be very attractive to investors.
Okay.
The concept of a triple net lease,
Okay.
or NNN.
Okay. I've heard that term before,
Yeah,
but I'm not entirely sure what it means.
of course. So in a triple net lease,
Yeah.
the tenant is responsible for covering not only the base rent,
Okay.
but also a portion of the property's operating expenses.
Okay.
This typically includes property taxes, insurance and maintenance costs.
Wow, that sounds like a pretty sweet deal for the property owner.
It can be. They essentially shift a significant portion of their expenses
Yeah.
onto the tenant.
It could be a very advantageous arrangement for investors
It can.
as it reduces their operating costs
Yeah,
and provides a more predictable bottom line.
right.
However, it's important to note that NNN leases are more common
Yes,
with certain types of commercial properties,
right.
like those occupied by well-established businesses
Exactly.
with strong credit ratings.
Yes, very important.
That makes sense. It's all about assessing the financial stability of the tenant
It is.
and ensuring they can handle those additional expenses.
Yeah, absolutely.
Now, while commercial real estate offers the allure of long-term leases and potentially lower operating costs,
Yeah,
I imagine there are also some downsides to consider.
there are.
What are some of the challenges or risks associated with this type of investment?
You're right. No investment is without its risks.
Right.
One of the biggest challenges with commercial real estate
Yeah.
is its sensitivity to economic downturns. If the economy takes a hit, businesses might downsize or even close their doors,
Oh,
leaving you with vacant properties
yeah.
and a loss of rental income.
That's a valid point.
Yeah.
It's like a ripple effect.
Yeah.
When the economy sneezes, commercial real estate can catch a cold.
Exactly.
So it's crucial for investors to carefully consider the economic conditions
Yes.
and the specific industry or sector their commercial property is tied to.
Precisely. And another thing to keep in mind is that commercial real estate
Okay.
often requires specialized knowledge.
Okay.
You need to understand the nuances of different property types, lease structures, and market dynamics.
Right.
It's not as simple as buying a house and renting it out.
So due diligence and research are key.
They are very key.
Don't just jump into commercial real estate
No.
without a solid understanding of the market
Right.
and the specific property you're considering.
Exactly.
Now, let's talk about a type of real estate investment that seems to be gaining popularity, especially in urban areas.
All right. Yeah.
Mixed-use properties.
Okay.
I always picture those trendy developments where you have apartments or condos
Yeah.
above shops, restaurants,
Mm-hmm.
and maybe even office spaces.
Right.
It's all about creating a vibrant, walkable community where people can live, work, and play all in one place.
You've captured the essence perfectly.
It's like a microcosm of a city within a single building or development.
Yes.
I can see why they're becoming so popular.
Yeah.
Especially as people seek out those more walkable, community-oriented lifestyles.
Absolutely.
Now, what are some of the advantages of investing in a mixed-use property?
Well, for starters, you have diversified income streams. You're not relying solely on residential or commercial tenants.
Yeah.
Instead, you have a mix of both, which can provide a buffer against market fluctuations.
Okay.
If one sector is struggling, the other might be thriving, helping to stabilize your overall income.
That's a great point.
Yeah.
It's like hedging your bets by diversifying your tenant base.
Exactly.
You're not putting all your eggs in one basket, so to speak.
Exactly. And another advantage is that mixed-use properties often command higher property values. Especially in desirable urban locations. People are willing to pay a premium for the convenience and lifestyle that these developments offer.
So you're combining the potential for steady income with the potential for appreciation.
You got it.
A winning combination for savvy investors.
Absolutely.
Now, I'm guessing that managing a mixed-use property comes with its own set of challenges.
It does.
What are some of the things investors should be aware of?
You're right. There are some unique considerations with mixed-use properties. One is the complexity of managing different tenant types. Residential and commercial tenants have different needs and expectations.
For sure.
So you need to be adept at handling those diverse requirements.
That makes sense.
Yeah.
You're essentially wearing multiple hats.
You are.
Residential landlord, commercial property manager, and community facilitator all rolled into one.
Precisely. And another challenge can be in navigating zoning regulations. Mixed-use developments often fall under specific zoning codes that dictate the allowable mix of residential and commercial spaces. You need to ensure your plans comply with these regulations.
So due diligence and a thorough understanding of local zoning laws are essential.
Absolutely.
It's not just about finding a great property.
No.
It's about ensuring it aligns with the legal framework of the area.
Exactly.
Now we've explored a wide range of real estate investment options.
We have.
From the familiar territory of single-family homes to the more complex world of commercial and mixed-use properties. It's clear that each path has its own unique advantages and challenges.
It does.
But I imagine the key question on our listeners' mind is, how do I actually choose the right investment type for me?
That's the million-dollar question, isn't it?
It is.
And the answer, as you might expect, is it depends. There's no one-size-fits-all approach. The best choice for you will depend on a combination of factors, including your investment goals, risk tolerance, financial resources, and personal preferences.
Let's break down those factors one by one. Starting with investment goals. How would those influence the type of property someone chooses?
Well, let's think about our hypothetical investors. Investor A, who's looking for a lower risk investment to build wealth over time, might be well suited to an SFR in a stable suburban market. They could potentially live in the property for a few years, building equity. And taking advantage of any tax benefits for owner-occupied housing. Then when they're ready to move on, they could rent it out for passive income.
That's a great strategy for someone starting out. It's a way to dip their toes into real estate investing while also addressing their own housing needs. Now, what about Investor B? With their higher risk tolerance and significant capital, what kind of property would align with their goals?
Investor B might be more drawn to a multifamily property or even a commercial investment in a thriving urban area. They could consider a mixed-use development with a combination of residential and commercial tenants, which could offer both diversification and a strong potential for growth.
I see how that aligns with their profile. They're willing to take on more risk for the potential of higher returns. And they have the resources to handle a more complex investment.
Exactly.
Let's say both investors are considering multifamily properties.
Okay.
How would their approach differ based on their individual circumstances?
That's an interesting scenario.
Yeah.
Let's start with investor A.
Okay.
They might consider a smaller multifamily property, like a duplex or triplex, which would require a lower initial investment and be easier to manage.
Okay.
They might even choose to live in one of the units.
Oh, yeah.
To reduce their housing expenses.
Smart.
And gain first-hand experience as a landlord.
It's like a stepping stone approach.
Exactly.
Starting small and gradually building up their portfolio as their experience and resources grow.
Exactly.
Now, what about investor B?
Okay.
How would their approach to multifamily investing differ?
Investor B, with their greater capital and risk tolerance, might be looking at larger apartment buildings.
Okay.
Or even developing a multifamily complex from the ground up.
Wow.
They would likely engage a professional property management company to handle the day-to-day operations and focus on the strategic aspects of the investment.
It sounds like their goals and resources really dictate the scale.
They do.
And complexity of their investment.
Yeah.
These examples really highlight how different paths can lead to success in real estate.
Yes.
Depending on your individual circumstances.
Absolutely.
Now, beyond investment goals, you mentioned risk tolerance as another key factor.
Yes.
How does that play into choosing the right property type?
Risk tolerance is crucial. It's about understanding how comfortable you are with the possibility of losing money.
Right.
Real estate, like any investment, carries inherent risks.
Of course.
Some sectors are more volatile than others.
So someone who's risk averse, like our investor A, might prefer the relative stability of residential real estate.
Makes sense.
While someone like investor B, who is more comfortable with risk, might be drawn to the potentially higher rewards of commercial investments.
Could be.
Is that a fair assessment?
Absolutely. It's important to be honest with yourself about your risk tolerance.
Right.
And choose investments that align with your comfort level.
Yeah.
For example, if you're someone who panics at the slightest market dip, a highly speculative real estate venture might not be the best fit for you.
That's a good point. It's not just about chasing the highest potential returns.
Right.
It's about finding investments that you can sleep soundly with at night.
Exactly.
Beyond investment goals and risk tolerance, what's another key consideration when choosing the right real estate investment?
Think about your capacity for property management.
Okay.
Are you a hands-on DIY type of person?
Yeah.
Who enjoys dealing with tenants and maintenance issues?
Right.
Or would you prefer to delegate those responsibilities to a professional property manager?
Okay, so it's not just about the financial aspect.
It's not.
It's also about the time commitment and the level of involvement you're comfortable with.
Right.
Someone who's short on time or doesn't want the hassle of dealing with tenants might be better suited to a single-family home or a smaller multifamily property that they can manage themselves.
Right.
While someone who's happy to outsource those tasks could handle a larger, more complex investment.
Exactly. Being realistic about your time and willingness to manage the property is crucial.
For sure.
Don't underestimate the demands of property management.
Yeah.
It can be time-consuming and at times stressful.
I bet.
If you're not prepared for that, it can sour your entire investment experience.
Great advice.
Yeah.
It's important to factor in those non-financial aspects as well.
Yes, it is.
Now we've covered aligning your investment goals, assessing your risk tolerance, and considering your capacity for property management.
Yeah.
Anything else we should add to this checklist?
Don't forget about market conditions.
Okay.
And your capital availability.
Right.
Real estate markets are cyclical.
Yeah.
And certain types of properties perform better in different economic climates. And of course, you need to be realistic about how much money you have to invest.
Right. It's all about timing and resources.
It is.
Someone looking to invest in a hot residential market might be better off with an SFR or a multifamily property.
Could be.
While someone with a large amount of capital to deploy might be more interested in the larger commercial development.
Exactly. It's about matching your investment strategy to the current market conditions and your available resources.
Right.
Don't try to force a square peg into a round hole.
I like that.
Wait for the right opportunity and strike when the iron is hot.
That's a great analogy. Be patient. Be strategic.
Yes.
And don't rush into an investment just because everyone else is doing it.
Exactly.
Now, we've covered a lot of ground here.
We have.
But there's one question that keeps popping into my head.
Okay.
How does someone actually get started with all of this?
Yeah.
It still feels a little daunting.
I understand that feeling.
Even after breaking it down.
It can feel overwhelming, especially when you're first starting out.
Right.
But here's the thing, you don't have to do it all at once.
Okay.
Start by educating yourself.
Okay.
Read books, attend seminars, connect with other investors, and learn as much as you can about the specific type of real estate investment you're interested in.
That makes sense. Knowledge is power.
It is.
Especially when it comes to investing.
Absolutely.
So start with research.
Yes.
And build a solid foundation of understanding.
Right.
What's the next step?
Once you have a good grasp of the fundamentals, start networking with real estate agents, lenders, property managers, and other professionals in the field. Building a strong team is essential for success in real estate investing.
So it's not just about the property itself.
It's not.
It's also about building relationships with the right people.
It is.
I like that approach.
Yeah.
It feels less overwhelming.
It does.
When you have a team of experts to support you.
For sure.
Now, what about financing?
Okay.
That always seems to be a major hurdle for new investors.
Financing is definitely a key piece of the puzzle.
Yeah.
Start by getting your finances in order. Improve your credit score if you need to. Save up as much as you can for a down payment. And explore different financing options. There are loans specifically designed for real estate investors. And you might even be able to partner with other investors to pool resources.
So it's all about being prepared and proactive. When it comes to financing.
It is.
What else would you recommend for someone who's just starting out in real estate investing?
Don't be afraid to start small. You don't need to buy a massive apartment building right out of the gate. Consider investing in a single-family home. Or a small multifamily property first. To gain experience and build your confidence.
It's like dipping your toes into the water before diving in head first.
Exactly.
I like that analogy. What about location? How important is that when choosing a real estate investment?
Location. It's a cliche for a reason.
It is.
The location of your property can make or break your investment. Look for areas with strong economic fundamentals. Job growth, population growth, and a good track record of real estate appreciation.
So do your due diligence and research the market thoroughly.
You got it.
Anything else you would add to this list of tips for aspiring real estate investors?
Remember that real estate investing is a long-term game. Be patient, stay disciplined, and don't get discouraged by setbacks.
For sure.
It takes time to build a successful real estate portfolio.
Words of wisdom, patience, discipline, and a long-term perspective are key.
They are.
We've covered so much in this deep dive.
We have.
And it's clear that real estate investing offers a wide range of options. For people with different goals and resources.
Absolutely.
It's all about finding the right fit for you.
That's exactly right. And you know what's fascinating here is that even though we've discussed these investment types as separate categories, the lines can blur sometimes. For instance, a single-family home could be converted into a duplex.
Turning it into a multifamily property. Or you could have a commercial property with a residential component. Like a storefront with apartments above it. Creating a mini mixed-use development.
So the possibilities are even broader than they first appear.
They are.
It's not just about picking a category and sticking with it. You can get creative and combine different elements. To tailor the investment to your specific needs and goals.
The key is to be open to different possibilities and to think outside the box.
I like that.
Now, based on our deep dive into your notes today, what stands out to you as the most interesting or surprising insight?
Honestly, what really struck me is how much emphasis you placed on aligning your investment goals and risk tolerance with the property type. It seems so obvious now. But I hadn't really considered it so explicitly before.
I see.
I was so focused on the potential returns that I overlooked the importance of finding the right fit.
For my individual circumstances.
That's a really important takeaway. It's easy to get caught up in the excitement of real estate investing. But it's crucial to be realistic about your own financial situation.
For sure.
Your comfort level with risk and your long-term goals.
Absolutely. And I also appreciate the reminder that real estate investing is a long-term game.
It is.
It's not about getting rich quick. It's about making smart, informed decisions, building a solid portfolio over time, and being patient.
Well said. And remember, you don't have to go it alone.
Right.
Building a strong team of professionals,
Yeah.
real estate agents, lenders, property managers, and even other investors can make the journey smoother and more successful.
We've covered so much ground today.
We have.
I feel like I have a much clearer understanding of the different real estate investment options.
Good.
And the factors to consider when choosing the right path for me.
Yeah.
It's been incredibly insightful.
I'm glad to hear that. And, you know, this deep dive has given you a solid foundation.
It has.
But there's always more to learn.
Right.
Keep researching, keep asking questions, and keep exploring the ever-evolving world of real estate investing.
I definitely will. This is just the beginning of my real estate investing journey.
Right.
And to anyone listening, I encourage you to do the same.
Yes.
Dive deeper into the specific areas that interest you. Talk to experts, analyze market trends, and really understand the nuances of each investment type.
Knowledge is your most valuable asset in this field.
Yeah.
The more you learn, the better equipped you'll be to make informed decisions and achieve your investment goals.
So true. Well, on that note, I think it's time for us to wrap up this deep dive. Thanks for joining us and happy investing.